Good morning, everyone. This is Leslie Jouflas with Trading Live Online, and welcome back to your Daily Five. And thank you, StockCharts, for inviting me back. This is such a fun show to do. This is where we have about 10 minutes to present about 5 charts, even though this morning I cheated and I have one quick number 6 chart to show you. So today, we're going to be looking at some of the support and resistance levels. I thought I was going to just kind of focus on some of the indexes today because of the sharp move to the downside that we saw last week. So we're going to look at the triple Qs, the Russell 2000, the S&P 500. We'll look at the Dow Jones Industrials. I'm going to use the YM for that. And then I'm going to take a look at the NASDAQ as well. But I think looking at the support and the resistance levels right now is going to be key to watching what the market does from here. So I'm going to go ahead and get my live charts up. And here's the charts that we're going to be looking at. Now, I think that we're going to be getting some more testing back and forth. In the last week or so, we've seen some really large ranges, especially in the Dow Jones Industrial. The S&P 500 had over 100-point range a day and upwards of, around 80 points. They had a 153-point range day. So those are quite large. So let's take a quick look at the VIX here, because the VIX had a spike move up from late last week where this red arrow is. And that's the highest that we've seen on the VIX since last January, almost a year ago. And now we can see that it is moving back down towards the lower end of the range. This, I'm thinking, is looking like the prices in the indexes are also going to be doing maybe a larger range. Like I said, some testing back and forth of some of these support and resistance levels. So let's start with the triple Qs. And let me show you a couple of things that I'm watching. First of all, the triple Qs back here, there's sort of conflicting patterns right now for the types of patterns that I use. So we had the high up here on the VIX, and then it looked as though it had formed a left shoulder, a head, and a right shoulder, a head and shoulders type of pattern. Now with head and shoulders patterns, with the A, B, C, D patterns that I use, there's A, B, C, D, there's over here, A, B, C, D up here. Those always occur with head and shoulder patterns. It's the way that that right shoulder forms. You have the top of the head, you have down to the neckline, a retracement up, and then another leg down. So generally, that gives you what I call conflicting patterns. You have one pattern telling you it's a sell pattern to the downside, and you have another pattern telling you it's a buy pattern to the upside. You never know what direction, what prices are going to do. So I like to find that support and resistance and monitor those areas. So here we can see that the break of that neckline got some movement to the downside. It didn't get a full target down, but it came back up, tested that neckline, and then more movement down. Now we're above this. Now, generally, with this, we can use a trend line right here off of where that high is down to the lower high here, and we're just above that now. Now this gives us a good area to watch, extending this lower trend line up. This should hold as some support, maybe a little bit dip down, a little bit below it, but back up. These lows right here, the lows made last week, are going to be very important lows to watch. Now, the MACD down here made some momentum lows that are the lowest lows that we've seen since about last May. And so again, that's saying that I think we're going to see maybe a bit more up and then some testing back down on the Qs. Large gap up on the Qs today. Now let's take a look. I'm just going to go in order that I have the charts here. The Dow Jones Industrial Index. This had one of the deeper retracements to the downside of all the indexes. You can see from this low to high, it retraced all the way down to the 786. Most of the indexes retraced only to the 0.50. This had a deeper retracement down. However, now it's having a bit stronger move up and a higher retracement back up. So I'm going to take this off. I'm going to put another retracement on so we can see where that is coming in. We're almost back up to the 786 on this side. So up around the 786 into this 886 would be expecting some resistance and then some testing back down. Now I marked in here a couple of areas. This dashed line here, you can see the prices. This was resistance, resistance, resistance. The market had a hard time getting up through there and staying up there. And then finally, this late October, it came up to new highs, but it didn't hold those highs. So again, I think we're going to be seeing some testing up and then back down again. Now, the NASDAQ had this retracement down, as I mentioned, just to the 0.50. So this did not have as much of a move to the downside as the Dow did. And again, the same type of pattern that we saw on the triple Qs, where it looked like a left shoulder, a head, a right shoulder, but we can actually also see that there was the ABCD buy pattern, which now seems to be the pattern that's moving. So again, I think we're going to see a test maybe back up into this area, maybe a little bit higher, and then some movement back down. And again, the MACD here, this is the lowest that it's been for quite some time. The RSI is just correcting back up, and the money flow here is just moving to the upside. Now the IWM, this is the iShares for the Russell 2000, and the Russell 2000 is kind of used as a bellwether for U.S. stocks. It is kind of the bellwether of watching the U.S. economy because of the focus on the smaller companies that make up this index. So it's been interesting to watch this index the last few months. It had been in a very large range. You can see this sideways range that I had marked in. And then late October, early November, it finally had a break to the upside. It was very short-lived and came down almost to the very low end of that range that has been forming. So this had a very deep correction compared to the other indexes. Here's a gap to the downside, and we can see I put the retracement from the high to low on here, and that's coming in right around the 0.50, maybe 618 area. Again, I think a bit more to the upside, and then some more testing back down. But I think that this is going to be a really interesting index to really be keeping an eye on, because it was not back here, it was not following the NASDAQ up to new highs when the NASDAQ was really showing strength, and it showed quite a bit of weakness on this down move. Now, I think these areas of resistance and support are going to be key in keeping an eye on in days and weeks and months to come. Now let's take a look at the S&P. The S&P 500 has been following this upward channel for quite some time. And here the prices on the decline from last week came right down to this lower trend line. This found support. This now is a very important support area. This is just right around the 4,500 area on the S&P 500. And here I've marked in this green line, and notice how right back here, we can see that the market went into this sideways range. I'll make this a little bit bigger, and a lot of doji type of closes, meaning some indecision. The market was opening and closing around the same price areas, and that's where this green line is. And you can see this center dashed line here. The market is just right about back into this area again, expecting some resistance there and some testing back down again. But these lows, I believe, are going to be, again, key to the market. The market is going to have to hold these lows. If they don't hold these lows, I think we're going to see another move, another leg to the downside. Now, on the upside, as I mentioned, this area of resistance, and then right up here were our previous highs. Also notice this pink line with the green here, that's just representing the size of this swing from high to low. And it was almost identical on this move to the downside. Now the RSI on here came down and corrected, did not have too much of a divergence on here. The MACD made, again, the lowest low that it's made in quite some time. And these are both correcting back up now. The money flow is staying down lower. It is turned up a bit, but it's not breaking any records here to the upside. So these are, I think we're going to be in a maybe a bit larger range for a little bit until the market decides again if it wants to come up and make new highs or come down here, retest these lows. And again, if it breaks the lows down here, I think we're going to see a larger move to the downside. So that's what I'm looking at. Those are the support and resistance areas that I've got mapped out right now. So I hope you found that helpful today. And I'll see you next week on another Your Daily 5. Have a great week, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.